Welcome to the coin market. Choose your coin wisely. You choose a zombie coin.
I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. And this is Bloomberg Crypto, a daily Bloomberg iHeart podcast. It's Wednesday, July 13th. If you want an example of the intense optimism of a certain kind of crypto investor, here's one. Some folks are still buying the token known as Luna Classic, which has flatlined towards zero in the aftermath of the collapse of the TerraUSD stablecoin. Why are people so willing to buy up zombie coins? I asked this question to Bloomberg senior reporter Mike Regan and Bloomberg reporter Misyrlena Egkolfopoulou to discuss the motivations of these risk takers. Mike, Misyrlena, you're back. I get to talk to you again.
Can't get rid of us.
Thanks for having us.
Such a pleasure. However, I do worry because when you're here, it means that chaotic things are happening that we need to talk about. So today's chaotic thing, or continuation really, is... What should we call them? Should we call them zombie coins? Should we call them revenants? Mike, tell us about the quest for value.
I like zombie coins. Let's go with zombie coins.
All right.
They're coming to get you, Barbara.
What's happening with zombie coins?
Well, my favorite is Luna Classic. As listeners probably have heard by now, the whole Terraform blockchain imploded in the spring. Luna, the sort of flagship token on that blockchain, was trading at about $119 per token in April, we'll say.
Merely weeks ago.
Yeah. As you know, Stacey, I love the abuse of the decimal system in crypto. At its low, it was trading for 0.6 zeros, 999967. That's its very low. So it's up 9,200% from its low just last month. And at that price, $1 bought you just over 1 million tokens of Luna Classic. But to me, I'm fascinating with these super low-priced coins because, like I said, at the low, you could buy 1 million of these tokens for that price. And to me, I think that's no coincidence. I think when someone realized all right, maybe this thing is worthless, but if I can buy 1 million of them for $1, I'm in.
I mean, who doesn't want to be a paper millionaire or a non-fiat millionaire? What kind of millionaire would that be? Crypto millionaire.
Yeah, an imaginary millionaire, I guess. A lunatic millionaire. But
there we go.
But someone else is buying them. And, so this is a token basically left for dead, but yet it lives on in this zombie life, as you pointed out. And, it's trading hundreds of millions of dollars in volume a day. It still has a market cap of about $500 million. So it's like the old Monty Python movie. I'm not dead yet, where they say, "Bring out your dead." I'm not
merely
dead yet.
A flesh wound. the other Monty Python reference.
So I don't know what it says about investor psychology, other than people will jump in and buy these ridiculously low price coins, and we saw it with Shiba Inu. We saw it with Dogecoin. When they get that low, there's a certain element of traders that are like, what the heck? Here's my lottery ticket budget for the week. I'm going to buy some Luna Classic. And then the pump and shill Twitter campaign just goes berserk. And if you search for LUNC, $LUNC, you'll see what I mean on Twitter. Just nonstop promotion of this thing. Obviously, people that are trying to get it up to break a zero, to lose another one of those zeros between the decimal point and the actual price.
Is break a zero a real phrase? Or is that something you invented?
Although someone invented it, I think, recently to deal with these things. And it's broken 2 zeros, which is a pretty big deal.
Congratulations to the lunatics.
Coming up, Elon Musk's appearance on Saturday Night Live this weekend didn't take Dogecoin to the moon. In fact, the 5th most valuable cryptocurrency retreated after his comments on Weekend Update. And that word, hustle.
Misyrlena, you've written about a different set of zeros, people who are chasing 25,000% returns on things. Tell us more about that corner of the market.
This is really fascinating just to hear sort of Michael describe what's been going on with Luna. And I think before we get into what you just described, 25,000% yield return on some of these coins, I think we just need to back up and understand sort of like how this entire ecosystem came to prominence last year. And Michael mentioned Shiba Inu and Dogecoin, which really I think are the two coins that got this entire ecosystem started.
The Trojan coins, as it were.
Yeah, because those coins were, worth essentially nothing. And then managed to get like a good following and a good hype around them to get their prices higher. And I think that sort of prompted the creation of all of these other, you can call them zombie coins, shit coins is another way that people a lot of times will call them in the DeFi space. And those coins could be created by anyone who could copy the same white paper of another, coin that ran the same way, get people to buy into it and sort of push the price up. And last year, we talked to so many investors who talked about the potential and the promise of this coin to, if you bought in, say, 1 million of them at $0.00002, if they were to, 1 in a million become the next big coin, you could make a lot of money off of that.
You would have $1 million at least.
And I think the appeal was you didn't really need to put that much money into it because it doesn't cost that much. And so if you're losing $100, that's a loss. I think a lot of these investors said, I'm happy to sort of take. And so that created an entire ecosystem of a lot of other things happening. And going back to the 25,000% returns that we've written about is, these coins needed to give a reason to investors to stay in and not just buy in and then dump. So a lot of times what they would do is they would offer, a percentage return to any of the coin owners if those coin owners were willing to lend out their coins for other several activities in the DeFi space. And they would promise returns of 1 to 2 to 3% per day that added up to be, numbers like 25,000% annually. And so that was a way to incentivize coin investors to stay into these projects long term because a lot of these people didn't want these coins to be a one-off. But the market was so saturated, and that was just a way for them to jump in.
I can't bear it any longer. I must take you back. Back to the grave, monsieur?
I want to ask you a question about what you said, though. How long was long term?
Long term in crypto lingo is like, a year maximum.
Right.
I mean, I think coins like Dogecoin or Shiba Inu that have had the longevity that they've had are considered like decades in the crypto world. These coins would come into prominence for weeks and then would get, rug pulled if they were scams or would just lose the hype that you needed to maintain in order to make that coin, have longevity. Obviously, it's a different market right now. Crypto market's getting a beating. And a lot of that DeFi space where last year in a bear market where everyone had time to trade because they were, at home, it was thriving. And this year, it's just not the same returns. There's definitely not the same energy. It's really hard to get people to buy into projects now. And so those returns that they were promised last year are just not, possible anymore.
Right. What's 25,000% on $1?
That was coincidentally, I think that was my first credit card rate back in the 80s. About 25,000%.
We'll be right back with more from Bloomberg reporter Misyrlena and Bloomberg senior editor Mike.
Zombie! Allez, allez!
I remember around last year when people were buying into Doge and Shiba, you had some anecdotes about, folks that you knew that were kind of like Doge and Shiba millionaires, effectively.
Right.
How are they doing these days?
Not so good. They don't talk about it as much as they used to. But, to me, and Missy has probably interviewed a lot of people like this, it's interesting when we hear so much from sort of the high-minded crypto people who want to change the financial system and disrupt this and disrupt that. And then on the other side, you hear from all the traditional financial people saying it's a big Ponzi, it's a scam, avoid it all. I feel like those two are sort of the tails of the bell curve.
Mm-hmm.
And in the middle, you've got these guys like my friends. I hate to use the word degen or degenerate, but I think that is the industry official term for
It's the nomenclature.
It's just people who are like, I don't know if this is the future of finance or if it's a Ponzi or not. All I know is this coin was up 1,000% last week. I want in. But I think there's also a lot of people who treated it who went in, clear-eyed and knew this could all disappear overnight. The key is never to invest more than you can afford to lose in any type of situation, and especially this. So they're not wearing their Bitcoin necklaces like they used to, and
the gold chains.
I think the laser eyes are gone from the your profile pictures.
Don't look at it.
Oh, Missy, you talked about the energy, right? Like, say more about like that vibe or lack of vibe.
Yeah. So I think I'll definitely agree with Michael here. It depends on what kind of investor you are. And there's different kinds of crypto investors. If you are one of the crypto investors that jumped in November when Bitcoin was at an all-time high because you had FOMO, then odds are right now you're probably facing several losses. But I think there's still some crypto investors who see this as an asset class that, despite its volatility, isn't going to go anywhere. Crypto's here, and we're going to keep trying to find places to make money. And I think a good example is one of the people we spoke to who said that even though 25,000% yields are not available anymore, a stablecoin like USDC will give you maybe a 9% yield, which is not great compared to what it used to be, but they argue it's better than what banks will give you.
Right. I mean, it's aggressively better than what banks will give you.
Suspiciously better.
Suspiciously better. And they're happy to take that risk despite the collapse that we've seen the past few months. But all in all, I feel like last year we just saw so much of the hype everywhere. And I think that this was a good reality check for a lot of people. I think that it's a lot harder to get that sort of momentum. And I think a lot of the people who were the sort of facilitators and instigators of that hype throughout the last year have really cooled down. And I'm talking about, popular Twitter accounts, popular Instagram accounts, popular Discord channels where a lot of these conversations were taking place.
Just as a final question, because you've both reported, I think, on the ups and downs and the shenanigans, what do you think's coming next? Like whenever, financial markets go through cycles, right? There's like in every bust are the seeds of the next boom. Is there anything that you're seeing where you're like, that's going in an interesting direction, contra anybody else?
Well, I think to Missy's point about these suspiciously high yields, I think there's, and I'm not necessarily basing this on any reporting. It's just what I would guess is going to happen next is that now there's going to be a more skeptical eye pointed at everything. Is this yield they're promising sustainable? And we might get to the point like, what's the going treasury yield at, like 3.25%? If you can get 3.5% out of crypto, that might look more attractive than trying to get 20% and beating the system. Like, is there legitimately a sustainable way to beat traditional finance yields in a safe, or at least not ridiculously unsafe manner in crypto? And I think that's where, people are going to focus next is like, how much of this was all sort of snake oil salesmen, and how much, what is the real potential for yield farming and rewards from staking in crypto that's sustainable and not so risky that people are going to just stay a mile away from it.
A return to boring.
Yeah, right. Which is good for guys like me,
I think that there's definitely a lot of parallels to what's happening now with what happened in the dot-com bubble. I mean, we just hear this over and over and over again. When I talk to a lot of these investors that throw money into crypto, I think although the losses have been sort of, big, I think they're excited to see what comes out alive on the other side. And I think we've all been waiting for this moment because it's just such an oversaturated market. So it's nice to see what projects can actually survive, what coins are actually going to be there for the long haul, if I may. So I think that's something to keep an eye on. Separately, I think the M&A industry, crypto industry, is becoming increasingly
mergers and acquisitions.
Yeah, mergers and acquisitions industry within crypto is becoming increasingly interesting. Obviously, we had some news out about Robinhood potentially being acquired by FTX. I think, it kind of feels like we're in the same place we were when sort of Facebook was buying everything, 10 years ago.
Ooh, FTX is the Facebook of this cycle.
I guess, and I think that, that was a crazy announcement. It obviously hasn't been officially announced yet, but if that were to happen, you're seeing some of, the biggest crypto exchanges getting access to the U.S. stock market crowd in a way that I think is going to be very interesting to keep an eye out.
I'm going to predict fewer Super Bowl ads too. I'm going to go out on a limb.
That's actually
and say
a good point.
Not as many Super Bowl ads.
But what about celeb endorsements? Because
I don't know. I don't know if I'm a celeb. I think I'm going to stick with the deodorant.
Ronaldo. Come on. Was it Binance? It was Binance, right? That's crazy. So yeah, we'll see.
We definitely will, and we'll have you back to talk about more chaos in the future. Thank you, Misyrlena, and thank you, Mike. You can find more of Mike Regan's reporting on the Bloomberg terminal on Bloomberg.com or follow him on Twitter. He's at Reganonymous. And you can find Missy, or Misyrlena, on the Bloomberg terminal on Bloomberg.com. And of course, she's also on Twitter. Her handle is at Misyrlena. That's MisyRlene. Since the founding document that led to the invention of Bitcoin first appeared in 2008, Bitcoin's true believers have adopted a philosophy that resembles one for all and all for one. Or so the theory goes. In Bitcoin, everyone's equal. But does that theory match the reality of the ecosystem? Tomorrow, data scientist Alyssa Blackburn and Dr. Erez Lieberman-Aden, an associate professor at Baylor College of Medicine, join me to discuss their research into who controlled Bitcoin in those very earliest days. I'm Stacey Marie Ishmael, and this is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Email your questions, comments, or suggestions for the show to crypto@bloomberg.net, and you'll find us on Twitter @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our producer is Mohammed Farouk. Desta Wonderad is our engineer. Original music by Leo Sidran.